Are you kind of tired of all the guesswork that comes with trading? Well, today we are throwing out the chaos. We're going to build a rock-solid trading playbook, step by step, specifically for the Nifty50. If you've been craving a system, a set of rules to follow, you've come to the right place. Let's get right into it.
Oh man, you know that feeling, right? That sinking feeling in your stomach? You see what looks like a perfect trend, you jump in, you commit your money, and then, boom, the market just rips in the complete opposite direction. These fake-outs, they're not just frustrating, they're what drains your account and crushes your confidence. But what if you could actually see them coming before they spring the trap? So imagine having a blueprint, a clear, simple set of rules that acts like a filter, right? Something that separates those genuine, powerful moves from all those tricky market traps. Well, that's exactly what we're going to build today, a reliable system to help you trade with some real clarity and conviction. Okay, so at the very heart of our new playbook is something called the 5-9 EMA crossover. This is going to be our North Star, a simple but honestly a surprisingly powerful way to pinpoint exactly when the short-term market momentum is about to shift.
So what is an exponential moving average, or EMA, anyway? Well, think of it like a smart average. You see, a simple average treats all the old data the same. But an EMA, it's smarter. It gives more importance, more weight, to what's happening right now. This makes it super responsive and lets us tap directly into the market's immediate pulse, which is absolutely perfect for the kind of momentum playbook we're building.
All right, before we can start running any plays, we have to set up the field, right? Getting your charts configured correctly is the first step, and it is non-negotiable. This makes sure that we're all looking at the market through the exact same lens. So let's get it dialed in.
Here it is, our super simple 4-step setup. We're going to use a clean candlestick chart. For our time frame, we'll stick to the 5-minute or 15-minute charts for intraday action. And now for the magic. We're adding 2 indicators. The 5 EMA, that's our fast line. It reacts instantly. Then the 9 EMA, that's our slow line, and it gives us our confirmation. The real secret is how these 2 lines interact with each other. That's where we're going to find our signals. It's simple, clean, and really powerful.
Okay, so our charts are set, our tools are in place, and now we get to the real heart of it. This is where we lay down our rules of engagement, the precise, black and white conditions for getting into and out of every single trade we make. All right, for a bullish entry, a buy signal, we're looking for 4 things to line up perfectly. First, and this is the big one, we need our fast 5 EMA to cut up and cross over the slower 9 EMA. That's our main trigger. Second, we got to see the price itself trading confidently above both of those lines. And finally, we want some confirmation. Is there strong volume behind this move? Maybe check if the RSI is above 50. When you can check all those boxes, that's our green light.
Now, for a bearish entry, or a sell signal, well, you guessed it. We just flipped the entire logic upside down. This time, we're looking for that fast 5 EMA to cross below the 9 EMA. The price has to be trading underneath both of those lines, showing us there's clear downward pressure. And just like before, we confirm it with strong volume and an RSI below 50. It's the exact same logic, consistent and repeatable, just in reverse.
Pay close attention here, because this is what separates the pros from everyone else. It's all about playing defense. The single most important rule is this: you have to know your exit before you even get in. That means setting a clear profit target, and you should be aiming for at least double what you're risking. It also means placing a hard stop loss to protect yourself if the trade goes south. And the foundation of it all? Position sizing. Never, ever risk more than 1 or 2% of your account on a single idea. If you master this slide, you're playing a whole different game.
So now you've got the rules for entry and exit. That's the science part. But now we get into the art. This is about learning to tell the difference between a real, sustainable move and just a market mirage. This is the skill that takes a trader from being just good to being truly great.
Real healthy momentum, it just has a certain feel to it. It's confident. You see a big surge in volume. That's the rest of the market agreeing with the move. The price doesn't just spike up and die. It moves with purpose. It holds its ground. All your other indicators are pointing in the same direction. And usually the broader market is giving you a nice tailwind. It's like a perfect symphony of confirmation.
Fake momentum, on the other hand, feels totally different. It feels nervous, weak. The number 1 warning sign is low volume. That's a huge red flag. On the chart, the price action just looks ugly. You'll see these sharp spikes that immediately reverse, leaving behind those long, telltale wicks on the candlesticks. It's basically a move that's built on nothing but hot air.
So let's put it all side by side. I want you to think of this table as your final pre-flight checklist before you enter any trade. Just ask yourself, is the volume high or low? Is the price action clean or is it spiky and weird? Are my indicators all agreeing or are they conflicting? Just answering these few simple questions before you act is your best defense against those market traps.
And speaking of conflicting indicators, let's pull back the curtain on our secret weapon for spotting that fake momentum. This is a concept that can literally be a game changer. It acts as the ultimate confirmation tool for the strength or the weakness of any trend.
So what is this secret weapon called divergence? Let me put it in one word for you. It's a conflict. It's that critical moment when the price is telling you one story, like, hey, I'm making a new high, but your momentum indicator, like the RSI, is telling you the complete opposite. That disagreement, that's your early warning flare. It's signaling that the trend you're watching is losing its internal strength.
Okay, let's break down the two types so you can see it clearly. On the left, we have bullish divergence. Now, notice how the price is making new lows, right? It's grinding down, but look at the indicator below it. It's actually making higher lows. That's a huge clue that the sellers are getting tired. Now, on the right, it's just the reverse, bearish divergence. Price pushes up to a brand new high, but the indicator just can't keep up. It's making a lower high. That's a massive warning that the buyers are running out of steam.
So here's the key takeaway, the main point. Think of divergence as your own personal, built-in lie detector for the market. When you see the price screaming breakout, but your RSI is just quietly whispering, I'm not so sure, you're probably looking at a fake out in the making. This is the tool that lets you see behind the curtain and avoid the trap altogether.
So there you have it. The setup, the exact rules for getting in and out, and the pro-level tool for sniffing out those fake moves. This isn't just another strategy. It's a complete playbook designed to help you trade with discipline and with real clarity. The framework is all here. The only question left is, are you ready to execute?